was probably about 4 weeks ago when we were hearing predictions of everything in the economy is absolutely perfect, no chance of recession. And you and I said, well, that's the perfect moment to say, let's look out for the recession calls in the next couple of weeks. And all of the changes to the global economy, whether it's trade, tariffs, taxes, government employment, a lot's changed. And also same thing with multifamily, inflation, and real estate. And we first have to acknowledge the futility and even trying to forecast and predict the future. We don't know, but we can look at the signs. And the signs today, I'm not saying in a couple weeks, but the signs today are relatively troubling.
Yeah, and what was interesting about this report is it started at a time in which the markets had not been flashing the recession signals that they are now, and one of the inspirations of this report was some messages that we'd been receiving from investors about their own opinions about where the market is heading, and there was some trepidation, there was some worries that our investors were maybe ahead of the market, as they often are.
Yeah, well, if you talk to a lot of commercial real estate professionals and investors, they tell you that we've been in a recession, and specifically just talking about commercial real estate. I mean, with sales volumes being incredibly low over the past several years, asset values have declined anywhere from 15 to 30% in some cases, depending on the markets. Rent growth in case of multifamily has been negative for most markets across the United States. It's still very negative in the South, the Sun Belt. It has been positive in the Midwest, in the Northeast. But the reality is that a lot of multifamily investors, they're experiencing distress in capital calls. It's widespread. We talk to investors every day, and it's a shocking percentage of them, those who invested in deals over the last couple of years, that are currently facing capital calls.